Dana. Happy New Year to you, bro. How
Hey
things been
Dale,
going for you?
Happy New Year to you.
Oh,
Excellent. Blessed. How you doing?
good. Breathing in and out. And this lady once told me, any day that you're looking down at the grass is a good day.
Yeah,
Huh?
I
So,
can't argue with that. Can't
yeah.
argue with
So,
that.
so I'm interested in what you think about the first week that we've had here after the New Year's, Dana. And do you ascribe to, as the first week in January goes, so goes the market, where you like block it into quarters and the kind of methodology I'm talking about, that people take the first day and
Right.
extrapolate it out. Do you believe in that stuff?
Um, there's evidence to all that, but you can find evidence to almost any day of the year and correlations to almost any day of the year, any stretch of
Okay.
days of the year. So I
Okay.
don't. Do we?
You have your own
We
methodology.
have our own methods. Yeah, we're not
Yeah.
going to set our allocations for the rest of the year based on what the market did this week, or we'd
Okay.
have no clients for sure. So,
Yeah.
but January is an interesting month. It's a unique month, separate than distinct from other months in that it more often is a counter trend month. So, um,
Okay.
and particularly with the conditions that we had coming into the new year after the rally in risk assets.
Yeah.
Momentum was through the roof. Sentiment in the short term had got pretty frothy. So you combine those conditions right for a reversal with the fact that January, when the new year turns, we often see that type of a counter trend move. Not surprised at all to see this kind of a move. As you alluded to, we do have our own methodology based on quantitative models, and our data is good. Still looks good. Still looks bullish in the
Okay.
intermediate term, which is for us, 2 to 6 months or so. So from that aspect, to be honest, in an intermediate term, I don't see anything that really worries me right now, other than the short term counter trend move. So from that aspect, we're looking to buy dips in risk assets, especially
Okay.
equities.
How
So
about
that's
the
where.
Mag 7, Dana? They've been underperforming. Apple has already come off 10%. Is that a buy to you?
Yeah, tech is one of those areas that has been a relative strength leader. Obviously,
Right.
I think it continues to be a relative strength leader in the intermediate term. In the short term, obviously, it's been the most. It's probably the most exposed right now. Just got way ahead of itself. But if you look at tech overall, I think in the intermediate term, like I said, I think it's a buy into dips. Nasdaq 100 obviously tested
Yeah.
all-time highs.
Right.
Still a strong looking chart as long as the underlying data is good. And like I said, our stuff still looks good. So after some sort of consolidation pullback, looking for new highs in the Nasdaq.
Okay.
You look at some of the popular
Or
tech funds.
yeah.
XLK went to new highs. Any pullback towards that breakout area in the 180 to mid 170s range is a buy for us. Same thing with semiconductors, SMH, for
Right.
example. Same thing, new highs, consolidating. I mean, it ran a lot. So for this pullback to unfold is not unusual, not unhealthy. So we're buying dips pretty much across the board in tech land. Uh, is the
Do you have like a level in the SPY that you're going to use as a key for entries on these other ETFs? Where you think the S&Ps could go to
No,
before you start deploying?
No, we look at everything on its own merits. To be honest, we don't
Okay.
base everything off the S&P because you had the
Okay.
Magnificent Seven, as you called it, for example, um,
Yeah, pull
going
up
through the roof
Apple,
back in
Dana.
July, and then you had other stuff that was going straight down, which was a warning sign in July, and
Yeah.
kind of distinct from conditions now. The last half of the rally following October, the internals have been great. The participation has been very broad. Um, Still, the broader market's way off of the all time highs. I don't know if we get there, but the participation was great. The internals were solid. So it's a lot different than conditions we saw in July. So that speaks to more of a counter trend short term pullback than it
Yeah.
does sort of a major top. So in the S and
Yeah.
P,
That's a narrative.
we're probably going to test that first maybe initial support level 4630 or so, maybe today. Um, that breakout area down in the low 4500 area would be a spot that as long as the
Yeah.
data holds up, we'd be aggressively buying there. So we came into
Yeah.
the year significantly long, but a lot of dry powder still in anticipation of some sort of a pullback. So we're
Okay.
starting to deploy that for sure.
Okay. Heck of a run in TLT from 82 to
Yeah,
100. Um, to me, looks ripe for a pullback to 92 or so.
yeah, and I heard you discussing before it came on, and I think you're spot on in the fact that people underestimate the amount of rally in bonds, over the last couple months uh, during
Right.
concurrent with the stock rally. I mean, bonds have been just as impressive to me, and
Yeah.
the key is, and we got to zoom out a little bit to look at what's going on in the bond market. And there's the 10-year yield, and this is one of the bigger developments I think in financial markets right now. Going back to the highs in
Yeah.
the early 80s, we think that long 60-year cycle in interest rates bottomed in 2020. So we think we go up for
Yeah.
decades to come, probably make a run eventually at double digits again. So, but in the yeah, obviously nothing goes in a straight line. So the first big level is around that 4% level where we tapped out
Yeah.
a year ago, consolidated for a
Yeah.
while, broke out, opened the way to 6.5% next, as long as this breakout level holds. Now we're obviously after the pullback in yields, there's a huge test of that breakout level around that just above 4%. So if this level does hold, that still opens up the upside to 6.5% next. If it doesn't, and we have a suspicion that it'll be a false breakout, and will open up further downside. We'll see. Obviously, being tested here today with the move in yields, but we have a suspicion it's going to be a false breakout, open more room to the downside, maybe towards 3.25 next. And the reason I said that, you mentioned that TLT
Yeah.
been a great bounce, obviously, since October, and we're not a huge volume guy. I don't spend a lot of time looking at volume, but if you look at volume in TLT,
Wow.
especially around the bottom, and then
Yeah.
even during the course of the rally, I mean, it's been a pretty impressive volume, which means
Fed was getting pretty long down there.
exactly,
Huh?
yeah, conspiracy. Open your own conspiracy theories for sure,
Yeah.
but the volume is pretty
Left an
impressive
island
to
bottom.
me. What's that?
Left an island bottom, it looks like. And now we could leave an island top. Um,
Could in the short term, yeah. And it's
yeah.
interesting how it's trading hand in hand with equities right now. So, in our
So do you think
view, maybe
go ahead.
maybe a short term, counter trend move.
Yeah.
Started, at the first of the year, just like stocks, and
Right.
would not be surprised to see this thing eventually continue higher. Like I said, put a false breakout in yields for now. Again, long
Okay.
term, very bearish on bonds. We think
But we could
again,
have Do you think we could have a wave of equality after this pullback, which was 18 points? So, say we pull back to 92, that's going to give you 110.
Uh, wouldn't surprise me at all.
Some guys are talking 120
Yeah, maybe.
before
I
it
mean, look,
completes.
it maybe 120. If you look at if you're looking at equal moves from the lows, and you
Yeah.
combine that with the volume that we've seen, wouldn't surprise me at all. Going back
And it
to
would
the
just be a retrace from the highs a few years ago at 170 or 180. So, this,
exactly,
right?
and if we are, down the road going to 10%, what
Yeah.
is a pullback from 5% to 3.25,
Yeah.
270? It's not a big deal. Nothing goes in a straight line. We've had a heck of a move since 2020, right? Up to 5% from zero essentially. So um, wouldn't surprise us. Obviously, everything is data dependent. We'll
Yeah.
continue to monitor. We have, as always, we reserve the right to change our opinion, Dale. But the data again, right now, looks good to us in the intermediate term. So
Okay.
we'll probably be buying the dips here, just like we are in equities.
How about miners, Jamie? They've been trying and disappointing, and there's a lot of it really depends on the miner, different chart patterns depending upon what you look at. But Newmont, GDX, would you buy
Yeah.
pullbacks there?
Um,
Well, there's the
yes.
gold.
Here's
There's the
gold.
gold.
We
Yeah,
trade ETF, so
yeah,
GLD to us, and we've talked about for a long time. Looks like some
cup and
modified
handle.
cup and handle, right?
Yeah,
Going back to the highs in 2011.
yeah,
Obviously, got exhausted at the COVID high. We've gone sideways for the last almost 4 years now. I still think it's ripe for a breakout eventually, so we are long gold. Looking for a breakout there. The interesting thing is, obviously, the miners, the equities are going to be persuaded by gold, but also by the equity market as well. So, should we break out in gold, obviously that would be a big boon to the miners, GDX,
yeah.
which I don't have that long-term fib on here, but in 2020 retraced just that 61 retracement from those 2011 highs. So obviously that's the pull from the equity market. But obviously, if we break out in gold, that should lift the miners pretty well. But like you said, the people have been looking for that, I think, for a while, and kind of stuck in the mud here. Um, Middle of the road, kind of hard to get too aggressive either way. We are long by a smaller amount in miners, but again, gold will be the tell for us if we do break out. Obviously, that would be a boon for the miners as well.
How about the energy sector, Jamie? They've been under pressure. XLE 84, really hasn't made any progress during the war, but just there could be escalation there with Iran. Um, I'm not saying it's going to happen tomorrow,
Right,
but the odds are increasing of some type of problem in the
right.
Persian Gulf with the Strait of Hormuz, and these are pretty cheap.
Yeah,
Are you
and you look
attracted
at
to?
crude oil. There's a GSCI crude oil index.
Yeah,
Nothing to get too excited about.
right.
Obviously, this had a great run as well from 2020 to 2022. Pulling back now, kind of in the middle of the road as well, like a lot of
Like,
commodities are.
yeah,
If I'm looking at the oil equities, I do like them. They showed obviously great relative strength in 2022 after getting beaten down for how many years. So I think after a little bit of a respite, there is plenty of room to go to the upside. Obviously, here's oil services. Um, had a nice run. this doesn't necessarily scare me right now. In fact, if you're looking for something to buy in equity land that's not extended, obviously the energy sector would be one option there. I could see oil services, OIH, obviously getting from down around 300. I would not be shocked to see it get back above 400. So, got it. Still seeing higher highs, higher lows. Nothing to get too concerned about. Naturally, the price of crude is going to have a big say in what goes on here. And right now, obviously, crude is on the chart is challenged a little bit, so that's a bit of a headwind. But we are long the energy sector. I see higher highs continuing here.
Anything overseas? If this dollar rally is just another bear market bounce, where you might get the edge of a weaker dollar helping you somewhere else.
Yeah, you know what? We see plenty of stuff overseas that looks good to us.
Japan still.
The weaker yen obviously has helped a number
Yeah,
of our positions. A hedged equity, Japan, which has
yeah,
gone through the roof.
yeah.
Obviously got a bit extended, but this has been awesome. Um, Even hedged Europe has been good. I can pull that up. Um, So if we see a reversal of that, obviously that would harm these. But you see, hedged Europe had a nice
Yeah,
breakout.
yeah.
Wouldn't wouldn't surprise us come back, test that breakout level. Would be buying that. Look for
Okay.
further highs there. But even on a unhedged basis, Japan looks very good to us. Even in the longer term, long term U.S. equities, I'm not too sanguine on after this intermediate term rally. Obviously, the long term what we call background indicators, valuation,
So do
investment
you think?
levels are through the roof.
Uh,
Not too excited. Japan, I
okay.
think, has a long way to go to the upside, and whether it's hedged against the yen or not, I think there's upside there. So I think a balanced portfolio in Japan, hedged and unhedged against the yen, looks good. This looks set up for another leg higher eventually in the Nikkei. So do
Okay.
like Japan
Interesting. So
and
that
India.
that augurs for a continued weak yen.
Yep, it
Okay.
does. I
Now
think
you
in the
brought this up, so you're saying you're not as sanguine about the U.S. as some other. So do you expect? And I know it's crystal ball stuff, but okay, we're set up. We're in the middle of this pullback.
yeah.
It's going to be bought back at support levels, and we're going to have another leg higher. Um, you think that we could be terminating something after new all-time highs finally happen in the S&Ps? And I don't think it's your style, but I've heard numbers like 51, 52, and then there are super bulls that say 6, 7,000.
Yeah, I do think there will be a reckoning, a termination at some point. Those long term cycles are kind of hard to call. I alluded to some of the what we call background indicators, which the long term numbers like P ratios, which are
Yeah,
still sky high despite a little bit of a pullback over the last couple of years. Um, Things like household investments in stocks, which are still just off record highs. All these things that
right.
hit record highs in 2000. I think by 2009, the financial crisis had worked off about half of what they should have before the Fed, quote
Yeah,
unquote, came to the rescue.
yeah.
And this allowed the rest of that natural correction to continue. And in fact, we reversed and built up those excesses to a greater extent. So I think all of that has to get unwound eventually. So pick a number on the downside wouldn't surprise me. The S&P down to 2000, below 2000, who knows? Um, that could very
Okay.
well happen because we need to correct all those excesses. But we're worried about the intermediate term, and right now, again, I think things look
So
good.
pretty much all clear for 3 to 6 months here.
I don't see anything that worries me for the next three to
Now,
six months. Correct,
okay,
and that's where we
because it's
place our
going to
bets.
matter. I think the stock market matters more this year than any other with the setup that we have for this presidential election. And if we rally and we're acting great into the first half of the year, but we're falling apart in the summer and fall, doesn't speak well for the incumbent party.
Right. Well, historically, that would be the case. Correct.
Okay.
And
All right.
that is that, if I'm going to forecast, and I don't like to do it because,
But I get you to do it.
yeah, you
I
do.
just manipulate you every time you're on here,
Exactly.
Dana. You're right.
Exactly. And those, and believe me, I'm happy if my forecasts are wrong because, fortunately, we built some quantitative models that are much
Yeah.
smarter than I am or we
Isn't
are,
that nice?
and that bails us out more
Yeah.
constantly all the time. So one more thing, the value sector, obviously it's
Like
been
the
growth.
Russell. Like the
The
Russell.
uh,
Yeah.
Here, this is the mid cap. So they people don't look at these pure um, style indices too often. So they break it up to the into the pure growth and value. And the pure value, strips out any type of growth, which has been obviously the leader. I think value, even in some sort of a secular decline, value could hold up okay after getting pretty much beaten down for the last couple of decades. And couple possibilities. This mid cap pure value. Okay, RFV would be the ticker symbol. Then
Okay.
turn around after COVID, spiked to a new high. Been a
Yeah.
nice consolidation. Finally broke out, pulled back towards that breakout point would be something we like to buy, and even the small cap. So people.
I'm
Uh,
hearing even micro cap stocks are beginning to have a heartbeat. You
Yeah, they've
probably don't go
participated.
there.
Like I said, the broader market has participated very well over the last
Yeah.
half of the post October rally. So that's been encouraging. Even some like the so here's this is a small cap pure value, which you strip out all the style indices. This one is the best indicator that I've found in terms of risk on, risk off, and you see the small cap pure value testing all-time highs after consolidating for a while. This one's setting up to
Wow.
break out as well, I think. So once this pulls back towards that 100 level, maybe down at 97, I see a breakout and a nice push higher in risk assets, including this one. And again, if we do reach a secular top after that, the breakout, something like value, I think can hold up better for a while. Like we saw in 2000, most stocks topped out in 98,
Yeah.
even though the dot comers ran up into 2000. And from 2000 to 2002, while those dot comers were crashing, a lot of the market did okay until that meat of the decline in 2002. So you mentioned looking at the S&P 500 as a barometer for our investment. You got to cast a wider net because while the S&P
Like
has
that.
been kind of the only game in town
Yeah.
for a long time, it's going to be the reverse at some point. And if you continue to depend on just that, you're going to miss a lot of opportunities elsewhere.
Okay, so people want to go fishing with you, Dana, because you're gonna, guide them towards casting a larger net.
Yeah.
Best place for them to follow you, and you're an RIA, so you manage money,
Yep.
and you have
We're an RIA.
reports.
Our obviously our main business is managing money. At J Lines Fund Management is the name of our RIA. We did start a kind of a trader's site a couple of years ago called the Lion's Share, where for do-it-yourselfers and traders who like to dabble in it themselves, you can follow along on the Lion's Share basically with what we're looking at, what we're trading. You get updates on actual moves we're making, buys, sells, and shorts on a daily basis. So you can kind of track along with what we're doing. And if you don't want to become a management client, this is a good way to kind of follow along with what we're doing. Do have a sale going on that we left open for your listeners if
Okay,
anyone's
thank
interested.
you.
But you can find us here at lionsharepro.com.
Well, Dana, I want to thank you. How many years have we been talking now? It's got to be like 4, something like that, 5. But
Yeah, I think it's a lot longer than that, Dale.
wow,
Time flies, right?
it does. But I want to thank you for sharing your good stuff when you come in here, and you know, also being open to all sides of the market, giving us ideas that our eyeballs weren't aware of before you got here. And so, I want to thank you and hope that you and all your clients, your family, your friends have a great 2024. I was told by someone who does GAN stuff last year not to worry about 2023, but GAN has 2024 down as a year where some negative events can occur and affect uh, the economy and markets. So keep that eyeball out starting, I don't know, maybe in the spring or summer. I'll be looking for something like that. But thanks very much, Dana. I appreciate what you bring to the table and edifying our community.
Well, I appreciate, and Dale, I appreciate you having me on for the last however many years it's been, and always appreciate you coming on. It's a very smart show. You got smart commentators, smart listeners, and all led by the coach. So I appreciate the community you started, and always fun being on. So I appreciate it, and Happy New Year to you.
All right, everyone, my trading warrior brother, Dana Lyons, and you could follow him on X now at J Lyons Fund Management. Go to his website and check out Dana's calls for 2024. So good hunting, buddy. You have a
Thanks,
great
brother. You
weekend.
too.
All right, I'll be in touch and we'll talk in the spring.
Sounds good.
All right, Dana Lyons, everyone. Now you could join the team in 14 minutes on the Morning Edge. Hope you guys had a good week. We laid it on the court and we'll do it again. So don't just count your pips, count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.